Good evening, students. Welcome to the next virtual coaching classes organized by Board of Studies ICA. This evening, we are going to study on this topic called tax invoice, debit note, credit note, and GST. And also, we will have a detailed study on the topic called e-bill and e-invoice. This is one of the procedural chapter which is there in your syllabus. Examination point of view probably may not be very important, but practically once you get into the practice, once you get into the industry, these topics are going to be the part and parcel of your routine life for the purpose of tax compliance. So as a routine, please confirm you're able to hear me and also you're able to see my presentation and my audio is proper. And by the way, students, I have uploaded today's material along with our previous session, which we have discussed in relation to the working notes. Always, whatever we have discussed, that has been hosted on the website. Yeah. Thanks for the confirmation, Viraj and Kaushiki. Let's start with our today's discussion. So today, I'll make you to understand with respect to the provisions of Section 31 in detail. Also, I'll take you through this chapter 6 of GST rules, where elaborated, detailed discussion on how a tax invoice is to be prepared, how a debit note, credit note has to be prepared, what are the circumstances under which these documents have to be updated. I'll also take you through in today's learning what is the importance of a debit note, what is the importance of a credit note, and when we will prepare the e-bill. Also, I'll make you to understand e-invoice under GST law. So these are the basic outliners for today's learning. And before we proceed further, we will have a recap on our previous topic called registration under GST law. So I'll quickly share my MCQ file. Last class, we didn't have time to discuss on this MCQ. Before MCQ, I'll just quickly brush up the topics on registration and then we will go for solving this MCQ, right? So what we have learned in the last class, we have learned something called basic definitions. In the basic definitions, we have learned something called taxable person. Also, we have discussed on computation of aggregate turnover. Aggregate turnover. We have discussed what all elements are there in aggregate turnover. Aggregate turnover is the key where you will be asked to solve a problem for 2 marks in your examination. This comprises of your aggregate turnover, comprises of taxable turnover, then exports of goods and services, then exempted or nil-rated supply of goods and services, or supply of goods and services which are not leviable to tax under GST. What is comprised here? This, when I say not leviable to tax, your petrol, diesel, and alcoholic liquor for human consumption. Now, these are the basic definitions we have studied in our previous class. And the importance of taxable person, a person who's already registered or person who's liable to be registered. I repeat, taxable person means a person who is already registered or liable to be registered under GST law. This is the importance of your term called taxable person, right? In addition to these definitions, we have discussed something called Section 22. Under Section 22, I have explained you on threshold for registration. Threshold for registration. In this chapter, I made you to understand the importance of special category states and other states. Special category states, I have 4 special category states: Manipur, Mizoram, Nagaland, Tripura. Rest all falls in this category of other states. So what is the importance of special category states? For special category states, we have 10 lakhs as a threshold limit. In case of other states, 20 lakhs is a threshold for the purpose of registration. So when we talk about this 10 lakhs or 20 lakhs, this 10 lakhs or 20 lakhs, we have to take into consideration supply of goods or services. In addition to this, we have discussed one more category called only supplier of goods. Only supplier of goods. In case only supplier of goods, this aggregate turnover, this annual aggregate turnover has been kept at a ceiling of 40 lakhs. Kept at a ceiling of 40 lakhs. For this 40 lakhs, northeastern states, that is 8 states we have. All these northeastern states, the other day I've shown you in map. Addition to that, your Pondicherry, Puducherry, and Telangana. These 10 states have said nothing doing. I don't want to give this special turnover of 40 lakhs. Rather, I will give you the exemption up to 20 lakhs. Right? This is what we have discussed under section 22. I repeat, 22 deals with your threshold for registration. From here, we have discussed something called exemptions under GST. Just give me a minute. Let me erase this. As I take you through, students, please make a running notes, or you just quickly glance through your running notes, what you have written in your previous class. Please carry your running notes so that it will help you to recap what is that we have discussed in the previous class. Next, moving on from this section 22, we have touched on something called section 23. Section 23, which dealt with exemption. Exemption for registration. Before we discussed on 23, we actually discussed on section 24, where we had 12 category of persons, where they said irrespective of your turnover under section 22, I mandate you to get registered if any of conditions laid out, 12 conditions or 12 category, I would say. 12 conditions or category laid out. Like example, your interstate supplies through e-commerce operator, or a person who's supposed to deduct TCS, a person who's supposed to deduct TDS. Likewise, we have discussed section 24, where any supplier who meets the category specified, then irrespective of threshold limit, I have to register. This is the importance of section 24. From here, we move on to understand in detail section 23, where section 23 has got a power. Let me just erase this. Section 23 under GST law has got a power where it has overriding effect on section 24. Overriding effect of section 24. Like example, sir, if I'm a small MSME, we had discussed on MSME. Sir, if I'm an MSME service provider, as per this provision, up to sum of rupees 20 lakhs, as a service provider, I'm exempted from registration, though I made any interstate supply where I'm mandated to register under section 24. I recommend please go through my previous slide where roughly around 6 categories are discussed on the basis of these exemptions. Examination out of this section 23, one particular exemption notification will be discussed where you have a 4 marks problem. In the 4 marks problem, one adjustment will be on computation of aggregate turnover. One adjustment will be on the basis of your applicability of section 24 registration read with exemption under section 23. Don't mug up the notifications. I repeat, no need to by heart the notification numbers. Just need to understand circumstances under which my section 23 overrides the mandatory registration under section 24. In addition to this, in a given problem, they will also test you how to compute input tax credit, how to compute ITC under section 18. Under section 18, we had three category of bifurcations we have discussed. First category, registration for the first time. So when I'm registering for the first time, what I have to do? You can take the input tax credit on your inventory 1 day prior to the date of registration. Category number 2, converting from composition to regular. Converting from composition to regular. Third category, where I'm already a registered person, a particular supply is exempt, which is made taxable from a particular date. So in these two cases, in addition to your inventory, ITC can be claimed on your capital goods. ITC can be claimed on capital goods. For the first time registration, ITC can be claimed only on inventory. This is one peculiarity we have studied on section number 18. So these are the aspects which we have discussed in our last class. So what I will do, students, I'll just quickly take you through the MCQ file. We have discussed this chapter, and paucity of time, I couldn't take you through this MCQ file. We will discuss this MCQ and then we will go ahead with our learning process for today. First question. The term taxable person, hope you are able to see my Excel Word file. The term taxable person represents point number 1, 2, 3. They have given 3 statements. Point number 1, that is statement number 1. What do they say? Registered person who pay tax on supplies made or received. So when we read this term taxable person, it means a registered person or person who is liable to register. So clause 1, registered person, it is a part of taxable person. Statement number 2, person who is liable to register under provision. Yes, this is also correct. Third statement, person who is evading payment of tax. Now, person who is evading payment of tax, who may be registered, may not be registered, is irrelevant. So as per definition, only these 2 statements are correct. So answer for this MCQ, we will say point number 1, point number 2. That is, taxable person means a registered person who pay tax on inward supply, outward supply. Also, person who is liable to register under GST. These 2 are covered under the term taxable person. Moving on to MCQ number 2. To ascertain aggregate turnover, following supplies are relevant. Let's examine them. Outward supplies on which tax is payable on forward charge basis. Now here, there is a supply which is called outward supply, on which tax is payable on forward charge basis. So when they say tax is payable, this statement refers to taxable supplies. So answer, this is forming part of aggregate turnover. Statement number 2. Supplies on which tax is payable on reverse charge basis. Supplies on which tax is payable on reverse charge basis. Now, this assuming if I am a recipient of service where there is a reverse charge notification. Example, sir, I have expenses on my P&L side where I have received a goods transport agency freight charges. On the freight, I have to pay tax on reverse charge, or say legal services. On legal services, I'm paying tax on reverse charge. Just because I'm paying tax on reverse charge, it doesn't form part of my turnover. So this is incorrect. This statement is incorrect. Clause number 2, I'll just put it in red color. This is incorrect. Then, number 3, supplies which are wholly exempt from tax under a notification. Yes, this is one of the component of my aggregate turnover. Supplies which are not liable to tax. What are not liable to tax? Your petrol, diesel, and alcoholic liquor for human consumption. This also forms part of my aggregate turnover. Supplies which attract nil rate of tax. Exempt, nil. Both are forming part of my aggregate turnover. Right? So answer for this, except to 1, 3, 4, 5. 1, 3, 4, 5. This is my answer for point number 2. Then MCQ number 3. An agent is liable for registration in relation to supply of taxable supplies. When? Now, this is a question where they're asking if there is an agent who he is liable for registration when he is making a supply of taxable supplies. And the given statements are only if principal is registered under GST. Now, principal may be registered, may not be registered. Principal may be registered, may not be registered. When I'm an agent, section 24 comes into picture and say, irrespective of your turnover, you have to register. So this answer is incorrect. Why is it incorrect? If principal is defaulting, you cannot default the agent. If the aggregate turnover of such agent exceeds the specified threshold limit. Now they are referring to section 22. We had that 10 lakhs limit for special category states. We had 20 lakhs for other than special category states. Now here, one of the category under section 24 mandatory registration agent is also covered. So this aggregate turnover is irrelevant for me. Statement number 3. If principal is a taxable person. Now principal might be a taxable person, may not be a taxable person. But if you look at your section 24, it says if agent is making supplies on behalf of a taxable person. So if the principal happens to be a taxable person, by virtue of section 24, even agent is liable. So what if principal defaulted in registration? Even then, agent is liable for registration. So I would say, if principal is not a taxable person, I would say it is not correct, since section 24 mandates agent to register. That means to say, if principal has got a turnover of only 10 lakhs, agent also has got a turnover of 10 lakhs. And if principal is not registered, it doesn't mean that agent should not register. My 24 has an overriding effect. Applying that theory, I'll say none of the above is the right answer. None of the above is the right answer. I repeat this point number 3 once again. My section 24 says that irrespective of your turnover, you have to register. Your statement number 3 says, if principal is a taxable person. What is a taxable person who is already registered or liable for registration? So if principal has a turnover less than threshold limit, he does not become a taxable person. Just because principal is not a taxable person, agent does not get out of the clutches of registration. So accordingly, this statement C is incorrect. Moving on. MCQ number 4. A taxable person can collect tax on the taxable supplies from the date when business has commenced. Now, when I say taxable person, a taxable person is registered or liable for registration. So the question is asking, he can collect tax. He can collect tax. Now, please understand, collection of tax happens only when there is a registration. If there is no registration, he cannot collect tax. So here, date when business has commenced. Now, if I have taken a registration, the day when I have commenced my business, I may be registered, may not be registered. So this is partially correct. Statement number 2, date when registration has been sanctioned. Now, unless I have registration sanction with the authority, I cannot collect tax. So this is a valid statement for me. Date when application has been filed for registration. So when I filed a registration application, I don't get the right to collect the tax because my registration may be cancelled. I might have applied for registration which was cancelled. So I don't get the onus, I don't get the responsibility to collect tax. So this is an incorrect statement. None of the above is also incorrect. Next, point number 4. Casual taxable person shall obtain a registration. What is a CTP? A person who does the business occasional basis in a state where he does not have a fixed establishment. So here, casual taxable person shall obtain a registration where either as a regular registration or CTP for GST compliance purpose. Answer, when I say casual, I'll not get a regular registration. I'll get only a CTP registration. This is incorrect. as an input service distributor along with CTP. When I have to register for CTP, input service distributor is not mandated as per law. This is also incorrect. After receipt of consideration for the first supply, you remember, in case of a casual taxable person, 5 days prior to commencement of business, I need to apply for registration. Here, this statement says after receipt of consideration for the first supply. So I should not wait for the first supply. This is also incorrect. Accordingly, answer will be none of the above. Next. Question number 6, job work. Job work is exempted from registration if, when is it exempted from registration? Aggregate turnover is less than specified turnover limit under 22. So if the aggregate turnover is less than 10 lakhs in special category states, 20 lakhs in other than special category states. Please keep in mind, under section 24, if there is an interstate supply, then we have a mandatory registration. Again, where under section 23, I have overreading effect up to a sum of rupees 20 lakhs, I need not get registered, right? So when I have aggregate turnover less than 20 lakhs, and if I'm doing a job work, because of section 23, I can continue to enjoy the benefit of exemption. Makes interstate supply to a registered person. So when I supply goods to a registered person, it does not give a absolute exemption, right? This is a limited exemption. Then point number C, supplies any goods on behalf of the principal, where tax on such supply is paid by the principal. Now remember section 22, where I was telling that whenever principal is paying, it doesn't mean that agent should not pay. Even agent is liable to pay tax on that supply. D, none of the above is incorrect because statement A is meeting the criteria of exemption. So these are the MCQs and answers for your MCQs. Now I'll come back to today's presentation. Yeah. Now let's move on from here. Students, what I'll do is I'll make you clear today's learning for tax invoice, debit note, credit note, e-way bill, and let me just come to, yeah. Just keep in mind, when we learn today's subject, I'm going to talk about documents. That is a tax invoice, debit note, credit note, then a delivery challan, then bill of supply. These are the documents which are there under GST law. Why do we use these documents? When we need these documents, I'll explain in detail one after the other. In addition to these documents, I'll make you to understand what are the legal provisions for a credit note or a debit note under GST law. Credit note or debit note under GST law. So examination, when you look at this particular chapter, at best, these are the provisions which you can expect for MCQ or a theory question for 2 marks. This is the majority weightage which you can expect from documents point of view. Then we have something called e-way bill provisions. Very, very important. May not be examination point of view, but practically when you get into the practice, when you get into the service industry, you will understand e-way bill provisions. Also, I'll make you to understand what is e-invoice under GST, what is the concept, why this concept was brought for our understanding. So this is the objective of learning from today's session, right? Then we will move on to the topic for today. Just let me erase this. This is little theoretical. You have to go with me. It is not problematic oriented. It is more theory. I'll make it more and more interesting with practical examples. Whatever we have learned on these topics for you gaining interest on. Why do we learn? How do we learn? The definitions, credit note, debit note. This is nothing but a document issued. It says it is a document issued. It is a document issued. By whom? By a registered person. By a registered person. Again, debit note is a document issued by a registered person. So if I'm not a registered person, whatever debit note, credit note I issue, maybe a debit note, credit note, I'll write it here. Debit note or credit note issued by a non-registered person. By a non-registered person. We can call that as a financial debit note or credit note. Please keep in mind, when you fill a form called GST annual return, that is GSTR 9, reconciliation statement in 9C. We have this debit note, credit note, which are issued by a non-registered person. This is one way to understand. Another way, I issue a debit note, or credit note without GST. For book adjustment. Again, this also we call as a financial debit note or credit note. I'll give a couple of examples. When I refer debit note, credit note, all along under GST, please keep in mind that is a document issued. These are the documents issued under Section 34. These are the documents issued under 34. So what if I issue a debit note without GST? What if I issue debit note or credit note without GST? Please call them as financial debit note or credit note. Example. So how do we understand this? Example. Say there is a cash discount. There is a cash discount. Or there is something called annual sale. Or I would say as a negotiation, as a business negotiation, there is a discount given, which I call as a credit note. I give a effect of, when I say financial, only credit note, not a debit note. Now, debit note, credit note is used for my reduction of receivable. Please visualize sundry datas. Sundry datas will have a debit balance. Sundry datas will have a debit balance. A credit note issued will reduce the balance receivable. So, whenever I issue a credit note, if this is a credit note which carries GST, then you call that as a debit note, credit note under GST. If I issue a credit note for any cash discount or annual sale where I don't have GST at all, then I can call that as a financial debit note or financial credit note. One more example. Say purchase return. I have purchased goods for rupees say 1,000. I have returned back goods for say 600. So what I will do when I return back the goods where GST is not there, I will debit my supplier. So when I debit my supplier, my payable comes down. This is a simple funda which you need to understand. In the entire discussion, the term financial debit note, financial credit note means those documents which are not as per Section 34. Those are not as per Section 34. Importance, wait for another 10 to 15 minutes. I'll give an exact clarity what is covered under 34, why we are giving so much importance to the term debit note and credit note. Are there any doubts before we go further with respect to this terminology? There's one doubt from Kaushiki. Suppliers aggregate turnover. Supplies on which tax on reverse charge included. Okay. This is a doubt asked from Kaushiki. Now, her doubt is, so when I look as a supplier, when I'm calling myself as a supplier, sir, I have a turnover, I'll call as T1. I have a turnover, I call as T2. Turnover T1 on which I collect the tax and I pay to the government. Turnover T2. Turnover T2. This is a turnover on which my customer has to pay tax to the government. Example, transportation activity. Now, question from Kaushik is, when I calculate aggregate turnover, is T1 alone to be considered or T1 and T2 to have to be considered? Answer Kaushik, both T1 and T2 has to be considered for the purpose of aggregate turnover. I repeat, for the purpose of aggregate turnover, T1, taxable turnover in the hands of the registered person. T2, the turnover which is exempted in the supplier hands. T2, the turnover which is taxable on RCM basis, has to be considered for aggregate turnover. Now, if you look from the customer point of view, Kaushiki, that particular turnover, which is sitting as an expense, on which he is paying tax on reverse charge, will never participate in aggregate turnover. Hope I have clarified your doubt, Kaushiki. Other than this, there are no other doubts. Let's go further. Now, there's a term called removal in relation to goods. Removal means dispatch of the goods for delivery. Dispatch of the goods for delivery. Dispatch of the goods for delivery by the supplier thereof or by any other person acting on behalf of the supplier. Then also you have collection of the goods by the recipient thereof or by any other person acting on behalf of such recipient. So there is something called dispatch. There is something called collection. So the goods are dispatched. Goods are dispatched for what? For delivery, either by the supplier or by any other person acting on behalf of such supplier. When I say any other person, this person could be a goods transport agency, where we have this reference to bailor, bailey. Bailor, bailey. Please remember your contract time. So any other person, whenever we refer, it could be a bailey. Collection of goods by the recipient or any other person acting on behalf of recipient. Again, when I say any other person, bailey. So I could have, when I say removal of goods, that could be a dispatch by the supplier, that could be a collection by the recipient. This is a definition when we read section 31, which deals with your tax invoice, where there's a time limit within which the goods the tax invoice has to be raised. For purpose of this time limit, this definition removal comes into picture. Only for that purpose, we need to remember this particular definition. Moving on. Now, tax invoice has to be raised under section 31, where goods are supplied by a registered person. That is, those are taxable goods. Issuance of a tax invoice has to be done before or at the time of removal or delivery of the goods. Now, here they say that a tax invoice under section 31, whenever taxable goods are involved, tax levy happens. So because a tax levy happens, my invoice, I call that as a tax invoice. Now, most of you would have seen an invoice. My invoice could have a header called bill, invoice, tax invoice. This is a general practice. I would say bill is not correct as per GST. Invoice is partially correct as per GST. tax invoice is a right term. Tax invoice is a right term you have to use under GST law. So here the section 31 says wherever goods are meant for removal, supply involve movement of goods. In other cases where there is no movement of goods, delivery is a point in time, or goods are made available where there is no movement of goods. So here they say tax invoice should be raised before or at the time of removal, or at the time of removal. So law says that on 30th January 2022, when goods are taken out, goods are removed from factory. Assuming this is a CAF transaction where 5th February 2022, it reaches the customer premises. Now, law says that you could have your commercial terms, maybe Ex Works, maybe CAF. I'm not bothered. It says before or at the time of removal. The moment you remove the goods from your factory, you should have your tax invoice. That is, in this example, on 30th Jan 2022, a tax invoice has to be prepared. A tax invoice has to be prepared. So the law says that prepare a tax invoice before removal of the goods. In other cases, what are the other cases? In any of the other cases, whenever you are making a delivery, that is at the factory gate, or whenever you are making available goods, please prepare a tax invoice. This is a provision with respect to goods. Now, in case of services, a registered person who supplies taxable services shall issue a tax invoice before or after the provision of service, but within a prescribed period. So here, you can issue a tax invoice before rendering service or after the provision of service. I can render the service, and after rendering the services, I can issue a tax invoice. So the law says that as per section 31, I can give an invoice before rendering the service or after rendering the service. When I say after, don't take it free granted. Within a prescribed period, you have to issue. As per law, 30 days is the time limit for issuing the tax invoice in case of regular service provider. In case of a banking company, bank, or non-banking financial organization, the time limit is 45 days. Time limit is 45 days. So the provisions under section 31 read with rule 46. It says that you need to raise an invoice within 30 days for all category. Other than these two categories. In case of bank and NBFC, I have 45 days as a time limit. So this is the provision with respect to services. Now, whenever I look at a tax invoice, these are the basic information as per rule 36. As per rule 36, basic details to be mentioned. Now, so why is that important, or where do we use? Suppose if you happen to be a coordinator with your IT team. Your IT team does a development for a software. When a software is designed, when a software is developed, you have to do the vetting of disclosure. So whenever a program is developed, whenever your accounting package is developed, you have to verify basic information and then confirm back, these are the expectations I have under the law. Law says that whenever you are issuing a tax invoice, first point, ensure that GST number of supplier and GST number of recipient, if registered, is available. First expectation. Then expectation number 2, my description of goods or services are mandatory. Then expectation number 3, what is the place of supply has to be mentioned on a tax invoice. And this is mandatory in case of a interstate supply. Only in case of a interstate supply. If it is intrastate supply, place of supply is not mandatory. Then point number 4, as a registered person, you are supposed to mention the breakup of IGST, CGST, SGST. When you are recovering tax, IGST, CGST, SGST, it is basic expectation to indicate the amount of tax charged on that particular supply. Finally, total value of supply. These 5 are the basic expectations as per Rule 36. So what can we expect from examination point of view? You can expect 1 mark MCQ question from this particular slide. So examination, they may ask, evaluate the basic disclosure under on a tax invoice. So when I read Rule 36, these are the 5 information which are mandatory. So what else I have to disclose? If you refer Rule 46, there are some 13 to 14 disclosures where detailed information is available. Address of the recipient, address of the supplier, then place of dispatch, your HSN number, service accounting code, then unique invoice number, which is not exceeding 16 digits. Some disclosure with respect to your LUT or bond, lot of data is there. So Rule 46 is the detailed requirement of a tax invoice. Rule 36 is a specific requirement of a tax invoice. Examination, MCQ, information to be mentioned on a tax invoice, 1 mark. Basic information, these are the 5 details required. Moving on further, little important. I'll first explain this concept of zero rated. Every time you have this confusion, I'll clarify and I'll come back to the disclosure under this Rule 36, Section 31. Whenever I talk about zero rated supply, this includes exports, this includes your SEZ developer or SEZ unit. SEZ unit or SEZ developer. These both are called as zero rated supplies as per Section 16 of IGST Act. Section 16 of IGST Act. Now please remember, both taxable and exempt supplies can be called as zero rated supply. Please make a note of this statement in your working note. Very, very important. Please make a note. Both taxable and exempt supplies, both taxable and exempt supplies can be called as zero rated supplies. Called as zero rated supplies. Right? Now, what is the importance of zero rated supply? No tax is applied in case of zero rated supply. That is, whenever I make exports, whenever I supply to SEZ, I need not charge GST. I need not charge GST. So I'll say no charge of GST. No charge of GST. Now, there is something called LUT or bond. LUT or bond. I'll explain the background why this LUT or bond. Then you will understand the importance of this slide, what we are going to discuss. LUT or bond is to protect the interest of revenue. Protect the interest of revenue. Now, assuming that I am a supplier, I sell goods to a particular customer, and I say that this customer is a SEZ unit, I should not collect GST. What if the customer is not registered as a SEZ unit? I raise an invoice and I say that my goods are meant for export to Germany. Now, when I say goods are exported to Germany, I need to provide this shipping bill details. Government may undertake this audit or may not undertake the audit. This letter of undertaking, this bond is a declaration saying that I have read the GST provisions. I will comply with the GST provisions. That means to say, I cannot claim ignorance. I cannot plead ignorance. I have to collect it. I have to pay the tax if there is any deviation. I'll give an example. For a moment, let's assume that there's a company called XYZ Limited. This company has got Unit 1, Unit 2, Unit 3. Unit 1 is in State 1, Unit 2 is in State 1, Unit 3 is in State 2. Now, assuming this Unit 2 is a SEZ unit. Unit 2 is a SEZ unit. One question you may ask, so why is that Unit 1, Unit 2, both are in State 1? Do we need to have a separate registration? Answer is, Unit 1 should have a separate registration. Unit 2 also should have a separate registration. Reason? SEZ is a separate identity. Non-SEZ has got a separate registration. So, all 3 units are registered. All 3 units are registered. Now, assuming a supplier called ABC Limited. ABC Limited supplies the goods or services to Unit 3. Now, Unit 3 is not a SEZ. So, whatever taxable supplies are made to Unit 3, tax has to be collected. By mistake, if I have an accounting software where in my books, Unit 1, Unit 2, Unit 3, I'll just have XYZ Limited. But when you look at the vendor master, my vendor master will have XYZ Limited, Unit 1, 1 GST number. XYZ Limited, Unit 2, 1 more GST number. XYZ Limited, Unit 3, 1 more GST number. So you should have 3 different customer codes because there are 3 different GST numbers. Here comes your information technology, your ISACA paper, where you need to understand something on how your chart of accounts are classified. So here, by mistake of law, benefit cannot be claimed for Unit 3, though Unit 2 is registered under GST. So only that unit which is registered under GST will have a specific exemption, not for the other units which are not registered under GST, under SEZ. So this is the importance of your zero rated supply. Hope this is clear, students. Now I'll come to the provisions under GST law, which talk about your disclosure on a tax invoice. LUT bond, hope you have understood. LUT bond is giving a declaration that anything goes wrong, I'm going to make good of the taxes along with penalty. This is a declaration for the department. Just give me a minute. Let me erase this. Yeah, so let's look at the GST provisions. Upon payment of IGST. So if I am making a supply with payment of GST, Now, I'll explain you this concept. Zero rated supply. I'll give you the background how this export with payment, without payment happens. Look at your, let me just put this one, purchase. Purchase is for say 1 lakh. On this I have paid 18,000 GST. My value addition, that is, say there is a processing which I have done, where 1 lakh has become 2 lakh. This is my billing value. In a particular tax period, say month 1, in month 1, I have purchases. This is going to debit side of P&L. I have sale, which goes to my credit side of P&L. So when you look at my P&L, I have a sales for 2 lakh. I have a sales for 2 lakh. I have purchases for 1 lakh. There's a GST input tax credit which goes into my current asset, which is going to current asset in balance sheet. Now, 2 lakhs is my zero rated supply because this is my exports. This is my exports. Now, since there is no output tax, we call this as a accumulation of input tax credit. Accumulation of input tax credit. That means to say, in my balance sheet, my current asset, month on month, the balance is increasing. If this trend continues, like month on month, this balance is going to increase manifoldly. So to cut this practice, there was an option given. There is an option given. What is that? Option 1, pay tax and claim refund. Option 2, file a refund application for accumulated input tax credit. So the law says that you can file a refund application for accumulated input tax credit. Now, these are 2 options available to claim a refund under GST law. Why we have to understand? You're going to handle this down the line in a corporate world. Now, please keep in mind, when I file a refund application, ITC on capital goods is not permissible as refund. Now, this is a policy matter. When I file a refund application under mode 2, my input tax credit on capital goods, whatever accumulation is going to the balance sheet, they say you cannot claim a refund. Now, this is a blockage of my input tax credit in balance sheet. To overcome this particular mechanism, there is option number 1 called whatever input tax credit is there, I debit the input tax credit, that is ITC, for making zero rated supply. That means to say, I will debit my ITC account and I'll make a zero rated supply. The moment I debit, whatever amount I have paid, I'll get back that money into my bank account. So to overcome this restriction of capital goods, I can choose mechanism 1, that is pay the tax and claim the refund. Generally, you need not pay the tax. Whatever accumulation is there, you file a refund application, then your refund will be processed. This is a backdrop when we look at your input tax accumulation and claiming refund. Hope this is discussed in your refund chapter. Now, if I go for option number 1, then 1 disclosure. Like when I issue a tax invoice, option number 1, no LUT. Option number 2, LUT. That means to say, when I pay the tax, LUT is not required. When I claim a refund of accumulated ITC, then LUT, that is letter of undertaking or bond, is required. This is the expectation with respect to tax invoice. Let me know if you have any doubts on this zero rated supply, whatever we have discussed so far. Great. Viraj is asking this question. What is a chartered accountant's duty during the tax audit when observed that the tax invoice is not issued within the prescribed time? So under the tax audit, Viraj, you may not quantify. There is no necessity to quantify or disclose this non-compliance under income tax audit. However, make a report to the management saying that these are the non-compliances under GST. Any of these non-compliances, the demand and recovery provisions, that is issuance of a show cause notice for recovery of penalty, may be undertaken by the GST authority. This is what you have to guide to the assessee. Next, Kaushik is asking this question. LUT or bond, it is a term or it is written somewhere in the invoice or registration. LUT or bond is like an application, Kaushik. On the GST portal, as a registered person, they just log in, they fill a form called letter of undertaking, the application for letter of undertaking. Once I fill the basic information, who is the director, from where this exports are going to take, I give undertaking, whatever non-compliance is there in relation to exports or non-exports, I undertake to pay the tax along with interest or penalty. Right? That is the requirement of LUT or bond. Kaushik is asking this question. Option number 1 is not clear. Pay tax and claim refund. Srinivas is asking this question. So can you elaborate why the mode payment of tax is required? Yes. Both Srinivas and Kaushik are asking this question. Explain this option number 1. I'll clarify once again. I'll just erase this and then give a clarification on this. Option number one, supply with payment of tax. With payment of tax. That means to say, government gets the accumulated tax on complaints, that is exports or SEZ. So what happens here? When I export, I have to file something called shipping bill. There is a GST portal where in my GST portal, when I file my R1, in shipping bill, I have my GST details and also my IC details. There's a matching done for this information with IceGate portal. So what the government will do, look, you have, say it is an export, the details are coming in the shipping bill. The details are also matching with the information as per GSTM. So government will process the refund directly into your bank account. In case of SEZ, I will file an application to the department saying that, look, this is my tax invoice. This tax invoice is acknowledged by my SEZ officer. Based on the supplies, the government is going to give this accumulated tax as a refund into the bank account. So option 1, they say you pay the tax and come with a basic documentation. Not major documentation. This basic documentation is good enough to process your refund. In case of option 2, you have to give all the list of your purchases from month 1 till whatever month you want to file your refund application. All the purchases you have to collate and go with a separate process. This is a little cumbersome. So you can choose method 1 or method 2. In case of method 1, because there is no restriction of ITC on capital goods, what I will do, I'll raise a tax invoice with GST, with IGST. This IGST, I'll debit from my electronic credit ledger. The moment I debit this money from electronic credit ledger, that money, this IGST, will be credited to my bank account on the basis of the basic details I have to furnish. This is my option number 1. Hope this is clear, both Srinivas and Kaushik. Srinivas is clear, sir? Great. Let's come back to the further discussion. Just let me erase this. I'm making it a little more interesting practically why we have to. So theoretically, you can just read for the examination purpose, but it's important to know the provisions, how to apply, when to apply, and what value addition you're going to make from reading this material. This is the key point which you have to observe. Few things come out of your experience, few things come out of listening to sessions like this. Like all the faculty who are going to explain, they're going to share their practical experiences for all these provisions, what you're going to address. Now, option number 1, if I choose not to go for LUT or bond, what is LUT or bond? That is the application I filed on my GST portal. So if I don't take a LUT or bond, then they say that supply is meant for exports or supplies to SEZ for authorized operations. For authorized operations. Now, this is a catch point here. When I say authorized operations, there is someone called SEZ officer. SEZ officer. So this SEZ officer is going to acknowledge your supply. I'll give you a backdrop how this SEZ supplies happen. SEZ is a bonded premises. I call this as a bonded premises. Bonded premise. So, why this is a bonded premise? There is a national importance for the goods which come into the SEZ, the goods which go out of SEZ. So, always there is a officer called special officer, I call as a special officer, who supervises the operations of SEZ unit. Any goods or services which come inside the SEZ, which go out of SEZ, should be ratified by a SEZ officer. So this officer is going to evaluate that this is meant for authorized operations. What do you mean by authorized operations? Authorized operations is a list which is given by this SEZ officer, saying that you can set up this SEZ unit for undertaking so-and-so manufacturing activity or rendering so-and-so service activity. That is the authorized operations. This is the importance of a SEZ unit. Practically, when you look at a bill, you need to question your client. So, where is the authorized list? Option number 2. So, I don't want to export with payment. Then I have an option called LUT or bond. I'll mention on a tax invoice. Supplies are meant for supply exports or SSZ for authorized operations under LUT, point number 1, under bond, point number 2. These are the 2 modes which I have to mention on a tax invoice. Next. Now, manner of issuing a tax invoice, that means to say, in case of goods, I have to prepare my tax invoice in original, in duplicate, in triplicate. If you look at few companies, there are color coding involved. There's a color coding involved for tax invoices. Like one will have original will be in white color, the duplicate will be in pink color, and the triplicate will be in yellow color. So few companies have this color coding where they may have handwritten or it may be a printed tax invoice. So in case of goods, I need to prepare my tax invoice, original for recipient, duplicate for a transporter, triplicate for supplier. So what if transport is there, not there? As per the law, my invoice should be in 3 documents. If transport is not there, I will skip the duplicate. I'll just issue something called triplicate. So on the right corner of a tax invoice, generally we'll say original or duplicate or triplicate. In case of services, only 2 documents, original and duplicate. There is a spelling mistake. It should be written as duplicate. It should be written as duplicate. So in case of original, the service recipient will have, duplicate, service provider will be having. This is a requirement in case of our services. Now, new concept has come called E-invoice. E-invoice is a electronic document. Electronic document. In case of electronic document, this 3 invoices under goods and 2 invoices and services not required. It is not required. So it says that only a electronic document is good enough. That means to say, you can send this invoice through email or any other mode of communication. Any other mode of communication. Should I need to print the invoice? Answer is definitely not required. I would say, as per the law, I need not print a tax invoice in case if the invoice is validated as per Rule 48. As per Rule 48. So now you may have a basic question. So if I print invoice, from Tally or SAP, will this be called as a E-invoice? Answer is no. There is a validation procedure. Validation procedure as per Rule 48. As per Rule 48. What is the validation procedure? I prepare an invoice. This invoice has to be sent to a portal called IRP. Invoice Registering Portal. IRP. Invoice Registering Portal. There is a particular schema. That means some basic information is required. If I have those information in a format called JSON. JSON. This is a format of the file. Like you have XML under income tax. When you file your IT returns, you have this file converted into XML. When you file your TDS returns, you have FUV format. FUV or XML. Now, these are the formats within which the files are prepared. Similarly, for an E-invoice, my invoice should be reported to IRP. IRP is a Invoice Registration Portal. This, I log in, I upload a JSON file. And once this is validated, if the file is validated, IRN is generated called Invoice Reference Number. Invoice Reference Number. If this invoice reference number is there, this is called the E-invoice as per Rule 48. As per Rule 48. Please make a note. IRP. Invoice Registration Portal. IRP. Invoice Registration Portal. IRN. Invoice Reference Number. These are the mandatory. These are the requirements of an invoice. Now, when I prepare a tax invoice, there is something called reference to HSN/SAC. Across the globe, 8 digits is the number which is adopted. 8 digits number is adopted for mentioning the HSN, Harmonized System of Nomenclature, Service Accounting Code. This is a universal requirement of 8 digits. But in India, they say that if you're a registered person having a turnover more than 5 crore, please mention 6-digit number. If your turnover, aggregate turnover is less than 5 crore, you can mention your HSN/service accounting code up to 4 digits. This is a requirement as per Rule 46. Revised tax invoice. I have discussed this when we were discussing on your time of supply. So I'll skip this revised tax invoice. There's one new concept under Section 31 where no tax invoice can be issued. I'll give a practical example and then I'll explain this provision. Assuming that let me give an example. I'm a registered person in the state of, say, Maharashtra. My nature of activity is service of UPS and battery. Service of UPS and battery. So what I will do, I'll sell a UPS, I'll also sell a battery. I'll say that every quarter, I do come and do a AMC of your this one UPS and battery, where I'll charge you, say, 150 rupees per visit. So here, on an average, daily, say the service engineer visits probably say 20 customers, and I have 10 service engineers. Now, that means to say on daily basis, 20 into 10, 200 receipts are there in my business. I'll make little more elaborative. Assuming 100 service engineers are there, 200 visits are done per day. Now, this 2000 visits, I have to collect 150 per door and I have to raise a tax invoice for these individual customers. Now, this is going to be a cumbersome activity on a daily basis. So this provision, Section 31, gives a relaxation. What is a relaxation? They say, if you have to issue a tax invoice, if you have a taxable value whose value is less than ₹200, then instead of individual invoice, you can raise something called consolidated tax invoice. So 2000 into 150. 15 twos are 30. Now, 3 lakh rupees is collected every day. What I will do, I'll raise only one tax invoice every day. Instead of raising 2000 invoices, law says that for entire rupees 3 lakh, raise one tax invoice on daily basis. So here, the law says that the customer is not insisting for a tax invoice. The value of supply is less than 200 rupees per supply. Then you can consolidate all those supplies and raise one tax invoice. This is the provision which talks about small business, MSME business. Now, this is with respect to consolidated tax invoice. Examination, 1 mark MCQ can be expected from this. What they can test you? Examine or validate the consolidated tax invoice, where they will give like statements. A taxable supply where value of each supply is less than ₹200. A supplier who raises invoices consolidating all the value of supplies irrespective of the value, one invoice in a day. Supplier who raises B2C, all B2C, one tax invoice per day. Now here, law does not look at B2C. Law does not look at the comfort. Law says where each value is less than ₹200 and the customer is not insisting for a bill, then you can consolidate all those tax invoices. Now, why there's a customer does not insist a bill? Please recollect your DTH service. the local DTH service provider, where we have this dish antenna, the agent comes and gives a card. Every month he will say paid 180 rupees, paid 150 rupees. So the card is there where the entry is made. In case of entry in the card, no separate tax invoice will be insisted. So I refer to this consolidated tax invoice. Coming further, next, issuance of a bill of supply. Issuance of a bill of supply. From tax invoice, I'm coming to new nomenclature called bill of supply. The law says that a registered person who is supplying exempted goods, registered person who is supplying exempted goods or services, or paying tax under Section 10. Paying tax under Section 10. Section 10 deals with your composition scheme. Then he has to issue something called bill of supply. Again, examination, 1 mark MCQ can be expected. I'll explain this way. Uh, 1 mark MCQ can be expected from examination. Please have patience. I'll give practical examples so that you can remember these provisions quite easily. Imagine the book stall. Imagine the book stall, maybe in the school or maybe outside the school campus. So when a bookstall sells stationery and printed books. Now, printed books may be of two kinds. One is academic oriented, which is exempt, which is non-academic oriented, which is taxable. Stationery, say it is say it is taxable. So when a student comes, he purchases books for rupees 3,000, which is taxable, books for 1,000, which is exempted, and stationery, say rupees 500. Total bill comes to 4,500. Now, the law says that because some portion is taxable, some portion is exempted, again some portion is taxable, you can decide whether to issue a tax invoice only for taxable supply, bill of supply for exempted supply, for exempt supply. So you have a choice to prepare one tax invoice for 3,500 and one bill of supply for rupees 1,000. I'll say tax invoice, I'll say bill of supply. So this is what the provision say. So what if I don't want to print both separately? Then invoice come bill of supply. The heading can be invoice come bill of supply. So when a customer is asking, sir, I wanted to buy stationery and all, I as an accountant, I cannot identify this is taxable, this is exempt, prepare separate bill of supply and all. Not to have a tension, not to have a confusion, the law gives me via media saying issue something called invoice come bill of supply. So if a student is coming and purchasing only exempted goods, then please issue something called bill of supply. If student is coming and purchasing only taxable, please issue something called tax invoice. If student is buying both taxable and exempted, issue something called invoice come bill of supply. Examination, 1 mark MCQ can be asked where they'll give you a statement, where they'll give you the supply of goods taxable, supply of goods which is exempted. Examine the document to be issued. Issue a tax invoice for taxable goods. Issue a bill of supply for exempted goods. Issue a tax invoice come bill of supply for both exempted and taxable goods. D, none of the above. Answer A, B, C are correct. So wherever you have both all 1, 2, 3, that will be your answer. Let me see if there are any questions before we travel further. So far so good. Let's continue with our discussion. Now, similar to a tax invoice, some basic information to be mentioned on a bill of supply. I'll skip this. Yeah, this is little important. Document called now. All along, I was explaining you something called a tax invoice. I also explained something called bill of supply. Also, I have explained something called tax invoice come bill of supply. Now, these are the three documents I have explained whenever there is a supply. Now, from here, there are circumstances, there are situations. Supply may take place at a later point in time. Like example, advance. Second, sale on approval basis. That means to say, I don't know whether customer will buy the goods or services. I will give the goods to the customer. On receipt of confirmation, then only I'll raise a tax invoice. Because unless the supply doesn't take place, I need not raise a tax invoice. So here, in case of an advance, I need not raise a tax invoice. Some voucher called receipt voucher I'll be issuing. Sale on approval basis, instead of a tax invoice, I'll issue a document called delivery challan. Now, this is how we are moving on to documents under 50 onwards, where various documents are discussed under GST rules. So this is the importance to understand the documents other than tax invoice, bill of supply from this slide onwards. So rule 50 says that what if I have received money in advance? Generally, in case of services, we come across this advance concept. Rule 50, receipt voucher. Receipt of payment in advance. I have a transaction where my money was paid in advance by the customer. Then the supplier of goods or supplier of service has to issue a document called receipt voucher. Now, sir, I have received advance. Say rupees 10,000. I don't know. This 10,000 is for what? Like, to give little more example, to give little more clarity. For a moment, let us assume that I'm a service provider for, say, I do insurance, I give transportation, I also do something called supply of manpower. I also give consultancy service. Now, insurance, say 18% is the rate of tax. Transportation, 5% is the rate of tax. Manpower supply, say 18% is the rate of tax. Consultation, say 18% is the rate of tax. Now, there is also something called intrastate supply or interstate supply. Intrastate supply, interstate supply. When I receive a sum of rupees 10,000, I don't know. My customer has not mentioned, is this 10,000 for insurance, for transportation, for manpower, consultants? Or my customer, I could have same customer in state 1, state 2, state 3. So I don't even know for which particular state this money has come. So this rule 50 says that in case of doubt, the rate of tax is not determinable. Tax shall be paid at the rate of 18%. So the law says that, don't worry, in case of doubt, where you don't know what is the rate of tax to be applied, please charge 18%. The next question comes, So should I charge SGST, CGST or IGST? Don't worry. Please consider that as an interstate supply and pay 18% GST. This is what a clarity provided under Rule 50 with respect to receipt voucher. So whenever I receive money in advance, for this money in advance, where I don't know what is the rate of tax, what is the nature of tax, then clarity is 18% tax and interstate supply. I issue something called receipt voucher. I don't issue a tax invoice nor bill of supply. I issue something called receipt voucher. Now, sir, I have received money. But this money, what I have received, I never rendered services. What should I do? Then Rule 51 says, don't worry, make a refund voucher where you have issued a receipt voucher to a customer, and that money against which you have received advance, you never made a supply, you never issued tax invoice. Then don't worry, please issue a voucher to your customer called refund voucher. Now please keep in mind, refund voucher comes into picture only when there is no supply and when there is no tax invoice issued. I have received advance, I have issued a voucher called receipt voucher. Only when I have issued a receipt voucher, then the law says that claim back the tax from government by issuing something called refund voucher. I'll give an example where we apply this theory of refund voucher. Example, in case of a builder receives, say, rupees 2 lakh as advance in month 1. This particular customer goes back to this customer made advance payment in month 1, 2 lakh, saying that I'm going to book a particular flat. After a span of 2 months, this customer comes back and says, sir, I don't want to go with this purchase. I want to cancel the booking. Now, look, this is a case where the builder has not made any supply. He just received the advance. And assuming builder has not issued a tax invoice on this 2 lakhs, ideally assuming 18% is the GST, builder would have paid rupees 36,000 as GST in month number 1. In month 3, this customer is going to come back and say, I don't want to go ahead with this booking. I want to cancel my booking. So in month 3, by virtue of this refund voucher, the taxpayer, that is the builder can get back this 36,000 as a refund from the GST authorities. So this is one mechanism where refund voucher is applied. I'll explain this self-tax invoice. Backdrop of this slide is as per Rule 36. Rule 36 says that whenever you claim input tax credit, let there be a tax paying document. Only when you have a tax paying document. Now, Rule 36 again read with Section 16. Only when you have a tax paying document, you can claim input tax credit in your electronic credit ledger. So what is a tax paying document? I could have something called tax invoice. I could have something called bill of entry in case of imports. I could have input service distributor ISD invoice in case of ISD. I could have something called self tax invoice for RCM. Now, government wanted to recognize that when we look into your profit and loss account, you have incurred certain expenses, say legal charges or GTA charges or your residential renting of immobile property, some like renting of a motor vehicle, various expenses on which you have paid your GST on RCM basis. Whenever you have paid GST on RCM, I wanted to ensure that you have a document called self-tax invoice. A document called self-tax invoice. This self-tax invoice is a piece of paper which enables or which is a requirement as per Rule 36 read with Section 16. So because of these two provisions, Section 31 has mandated for a document notified list of goods and services 9.3, specified list for a specified person 9.4, where I have my supplier who's not registered, or notified list on which I have to pay tax on RCM. In these cases, I have to issue something called self-tax invoice. So the law says that whenever you have this notified list, a supplier has to prepare this document called self-tax invoice. Why? The supplier is not registered on the date when the supply has been made, or the person is liable to pay tax under 9.3 or 9.4. In these cases, I, as a registered person, have to prepare a document called self-tax invoice, right? So students, we are at 7:32. Let's have a break for 8 minutes. 7:40, we will resume back with our discussion, right? Self-tax invoice is what I have briefed you. The purpose, background, and its application. Let me see if there are any questions before we go further. Yeah. There's one question by Kaushiki. Consolidated tax invoice is to be issued for supplies made each day, or it can also be issued on a monthly basis. This is on a daily basis, Kaushiki, not to be consolidated on a quarterly or annual basis. Every day, whatever supplies are there, that have to be consolidated. So keep the purpose, why this consolidated tax invoice? Considering the practical difficulty for MSME business. Like this, I've given an example of your dish and this DTH service, direct to home service, where this every month I pay 150, 180. There's a card which is given to me. They make an entry in the card. Similarly, this is a small AMC, refrigerator, TV, washing machine. If I have an AMC, this is a mechanism where they don't give a bill. There is a standard card. So every month they will make an entry. Like example, pest control. Say if I'm renting services of pest control, I'll say, so per month I'll charge you 500 rupees. What I will do? My person will come every month, first week of the month. He will keep the pesticide in your residence so that pests are controlled. And for the visit, there's a logbook or a card in which they make the entry. Since the rupees 500 is being collected, which is okay, the loss is rupees 200. So assuming I collect only 100 rupees, less than 200 rupees, I don't raise a tax invoice. I just consolidate on a daily basis. The agent reports to the accounts, and accounts has to prepare one consolidated invoice on a daily basis. And these days, everything is electronic. Like they give this QR code, pay your phone pay sort of thing. So whatever money comes into your phone pay, consolidate all those receipts and then prepare one tax invoice. Right? Now, in case of continuous supply of goods, you have to raise a tax invoice whenever there is your statement issued on as per the contract. If not, a statement is issued, as in when you receive a payment, you have to raise a tax invoice. In case of a service, whenever I have a due date within which the payment has to come on that day, I have to raise a tax invoice. Or if there is no milestone as per the contract, the day when you receive the money, raise a tax invoice. And if it is event linked or completion based, please raise the invoice as and when the activity is completed. Now, law says that whenever you have a contract under which the services are rendered, please raise a tax invoice when the contract is going to terminate it abruptly. Supply of services ceases under a contract. So if the contract is terminated in mid, before the completion, so mid of the supply, the termination happened. So the law says that to the extent you have rendered your services, please raise a tax invoice. So government is trying to recognize the portion of service which was rendered. Now, legally, this is not enforceable. Reason, when the service is not good, the customer doesn't even pay for the value of service rendered. It is only academical, not practical. Yeah. Now, goods sent or taken on approval. Very important and very interesting provision. I'll explain an example for you to understand this particular provision. Let's take example of, say, a tool manufacturer. Tool manufacturer. I'll give an example of, say, let's take example of XYZ Limited, who supplies a tool to a customer called, say, Maruti. To Maruti. Now here, generally, the customer says, prove the performance of tool. Then only I'll buy the tool. Customer says, you prove this performance. On the basis of performance, I'm going to purchase the tool. Assuming the cost of tool, say cost of supply is rupees 8 lakhs. So customer says, I'm ready to buy the tool, provided you can prove the performance at my factory, in production. Now, this is little practically where we come across these circumstances, where the law says that the goods are sent on approval basis. Goods are sent or taken on approval basis for sale or return. The sale may take place or return may happen. When does the sale take place? When the performance is proved. When does the return happen? When I fail to prove the performance, right? So in case it is meant for approval, and the goods are removed before the supply takes place. I have removed the goods before even the supply has taken place. That means the goods are taken out of factory. Goods are taken out of factory. Then they say, invoice shall be issued before or at the time of supply or 6 months from the date of removal. So the law says that from the date of removal, assuming from the factory, I have removed the goods on 1st June 2022. 6 months from there ends on say June, July, August, September, October, November. So on 1st December 2022, this time limit of 6 months is going to get terminated. Law says that on or before your 30th November 22, please raise a tax invoice. Law says that I'll give you 6 months time limit to raise a tax invoice. If you don't raise a tax invoice in 6 months, it is deemed that on the day of removal, I presume that it is a supply. So the law says that maximum I'll give you 6 months time. If you can prove the prove the performance, raise a tax invoice. So what if I fail to prove the performance? Then bring back the tool. Bring back the tool. So what if within 3 months I have proved the performance? Good. Raise a tax invoice. Raise a tax invoice. That is, the supply happened before the time of supply, before or at the time of supply. That is, before the 6 months, the time of supply has triggered. How did the time of supply trigger? By receiving the performance. This is what we need to understand. So there are various business requirements. I gave an example of a tool manufacturer. Let's take one more example. The classic case where we have this time limit of 6 months applied is in case of a jewelry business. In case of a jewelry business, assuming a celebrity wanted to purchase jewelry for some occasion at their, some event at their home. So the register person, say register person, Mr. X, who happens to be the owner of a jewelry shop. He sends, say, 50 lakh worth jewelry. He sends 50 lakh worth jewelry on sale on approval basis. That means to say, the customer will pick and choose out of 50 lakhs, how many ornaments they want to retain, how many ornaments they want to return back. So in these cases, law says that 6 months is the upper limit within which you have to make a supply. So if I don't raise a tax invoice within 6 months, it is deemed that the day you have removed the goods, the supply takes place. This is the importance of Section 31. Now, the example of tool manufacturer, the example of jewelry, whenever you want to move the goods on approval, whenever you want to move the goods other than a tax invoice, I use a document called delivery challan. DC delivery challan. So this document delivery challan is prescribed as per Rule 55. It says that transportation of goods without issue of an invoice. So whenever the goods are meant for movement, I don't issue a tax invoice. Examples they have given. Supply of liquid gas, where quantity at the time of removal from the place of business is not known. Now, LPG, there is in case of this liquid gas, this mass keeps on varying because of temperature. Like example, your petrol and diesel. If you fill your petrol or diesel early in the morning, or the gas, now it has got little condensity more because of thick wet climate. If you fill in the noon, there could be a little lesser mass because of the heat which prevails. So then in case of LG, liquid gas, they say, because it is not known at the time of removal, you can use a delivery challan. Transportation of goods for job work. When I move the goods for job work, I'll give an example. Take example of a manufacturer. Manufacturer has got 3 processes. Process 1, process 2, process 3. Like process 1, cutting, process 2, heating, and process 3, joining. Cutting and heating is not there in the factory premises. Joining alone is a process which is there in the factory. So what happens? Directly from the premises of supplier, the goods travel to the premises of job worker 1. From there, it goes to the premises of job worker 2. After this, it comes back to the premises of the main register person. So when I send the goods for job work, instead of a tax invoice, I can use a document called job work. Also, probably Vignesh sir would have explained this concept called Section 19. Under Section 19, supplier, buyer, and job work. Assuming supplier is in the state of, say, Rajasthan. Buyer is in the state of, say, Tamil Nadu. Job worker is in the state of Maharashtra. The buyer can instruct the supplier to supply the goods to the job worker in Maharashtra, raise a bill in the name of buyer in Tamil Nadu. This is governed as per provisions of Section 19. And after the job work, the goods can be brought back to the premises of this buyer, or from this job worker, the goods can be sent to another job worker premises, say job worker 2. Job worker 2 is in the state of, say, Orissa. So if the goods wanted to move from one state to another state, or one place to another place, I can use a document called delivery challan, which is meant for job work. So this is again an occasion where I don't use a tax invoice. Occasion number C, transportation of goods for reasons other than. Now, these are the circumstances where I don't raise a tax invoice. I use a document called delivery challan. Business, most of the cases, the movement is happened through delivery challan, where I'm not sure the customer is going to buy the goods. It is meant for approval. I have to prove the tool or the goods performance in the premises of my customer factory. Like example, say MRF, C8, Titan, or Toyota, where I as a supplier, I have to prove the performance to the satisfaction of the customer. In those cases, I don't raise a tax invoice. I issue a delivery challan under Rule 55. Supply, other suppliers as may be notified by the board. Now, these are the circumstances under which a tax invoice will not be issued. Rather, a delivery challan under Rule 55 will be issued. Now, basic disclosure, what information needs to be there. Procedural, don't worry about your examination. Now, there are exception cases where law says that where goods are being transported, You remember the definition of removal? So the goods are removed from the factory. For what? For the purpose of supply to the recipient. But the tax invoice could not be issued. Tax invoice could not be issued. So why the tax invoice could not be issued? Probably there is something called weighment. Like take example of your LPG gas, liquefied petroleum gas, or there is something called scrap. Sir, I have old wooden scrap or steel scrap. Unless I know the weight, I cannot raise a tax invoice. So those are the cases where I cannot prepare a tax invoice. Though it is meant for supply, I cannot raise a tax invoice at the time of removal. So there are certain circumstances which does not permit to raise a tax invoice. Those cases, for the purpose of supply, I can issue a document called delivery challan. This is an exception for tax invoice. Now, for a moment, let's take example of your windmill supply. All of you know, windmill looks like a fan. Like there is a tall tower, and this tall tower has got 3 fans. You know, this fan, and this fan. So there are 3 fans which rotates by virtue of a windmill. So this windmill, when I have to supply, I cannot supply in an assembled condition. In an assembled condition, I cannot supply. So what I will do, I will completely knock down or semi-knock down, I'm going to supply the windmill. Law says that first prepare a tax invoice. Now, assuming there are 4 lorry or 4 vehicles through which this consignment has to be sent, I cannot prepare 4 tax invoice. So law says that prepare 1 tax invoice and issue delivery challan for all other subsequent consignments. So out of 4 vehicles, 1 vehicle will have tax invoice and 3 vehicles will have something called a delivery challan. And this delivery challan will have a reference to the invoice. Law says that prepare a DC and quote the invoice number, invoice reference on that delivery challan. And each consignment shall be accompanied with the copy of DC and certified copy of invoice. So when I have these 3 delivery challan, I'll have a self-certified copy of a invoice. So why is that this is required? Now, when you have these 4 vehicles, not guaranteed that all the 4 vehicles travel together. There could be a scenario where 1 vehicle has 50 kilometers away, 1 vehicle is maybe 30 kilometers far behind, another vehicle is yet to start from the source point. Now, because of this various distance and other parameters, law says that in case of a CKD or SKD condition, you have a delivery challan where each DC will have a reference to invoice and also a copy of this self-certified invoice. And the original copy of invoice shall be sent along with the last consignment. The consignment which leaves at last, the last consignment which leaves from the factory will have this original invoice. So this original invoice will be received by the customer when the last consignment comes to the premises of the delivery point. Input service distributor, Rule 54 gives the details for, like a tax invoice, what needs to be mentioned on a ISD invoice. Insurance banking company. Now, most of you, when you would have done your internal audit or tax audit, etc., you would have noticed that for bank charges, there is a consolidated invoice. Or a piece of paper which says that your account is debited for so and so charges. Now, this Rule 54 says that in case of a supplier of a bank or an NBFC, There could be a mechanism where a consolidated tax invoice can be done on a monthly basis. There is a choice. Every transaction prepares separate invoice, or as a bank, you can issue one invoice every month for all the transactions, and by whatever name called, not guaranteed that it should have a heading of tax invoice or invoice. You can have something called advice, payment advice. So just if I have this document with an advice, that is good enough to say this is a document, piece of paper for the purpose of compliance under GST law. GTA, Goods Transport Agency, whenever the document is issued, like a consignment note, it should have basic information like what is the weight of the consignment, who is the consigner, who is the consignee, consigner, consignee, vehicle through which this consignment is carried. I'm just focusing on little important aspects, friends. Now, next important aspect, E-invoice under GST law. E-invoice under GST law. Before I start with this E-invoice, let me see if there are any doubts. Good. So far, so good. E-invoice under GST. This is just a format where when I say E-invoice, please make a note. Please make a note. E-invoice is not a document printed from a software or electronic document as per IT Act. That means to say, please keep in mind, just because I printed from my accounting software Tally or SAP, please don't call that as an E-invoice. Sir, I have given an electronic document which is Excel converted to PDF, which is recognized as per income tax, Information Technology Act. These two are not in compliance with GST law. So what is there as per GST law? As per GST law, when I prepare a tax invoice, which is E-invoice, that looks like this. That looks like this. Where there's a standard QR code. This is my QR code. And also, there's something called IRN. What is IRN? Invoice reference number. Invoice reference number. This is my IRN. Now, I call this as a hash key, which is 56-digit length. Now, this is a document which is recognized as per GST law. IRN is available from a portal called IRP, Invoice Registration Portal, like e-way bill, like GST portal. There is a e-invoice.gov.in. This is called Invoice Registration Portal. There are 10 portals as on date for the purpose of e-invoice preparation. So when I prepare this document electronically, this QR code, anyone scans, if you have a scanner in your mobile, just scan this QR code, you will see the invoice number, this invoice number, and this acknowledgement number, this IRN number. These two will be available for reading purpose. So why do I need that? This is required as a compliance by GST. This is an overview of how IRN E-invoice looks like. Now, basic provisions. E-invoice is a mechanism where the invoice shall be prepared by such class of registered persons. So the law says that, look, I'm going to identify who is going to prepare this E-invoice. Now, this class of registered persons was notified on the basis of annual turnover, aggregate turnover. So on the basis of aggregate turnover, law has defined who all are the registered persons who have to generate e-invoice. And this form, INV01, is a form through which this IRN will be made available. Now, so what happens? Now, I am a notified registered person. Now, due to lack of knowledge, I have given a regular tax invoice and not a e-invoice. Not a e-invoice. What happens? Law says that, Rule 48 says that every invoice issued by a person to whom this e-invoice applies, for whom this e-invoice applies, in any manner other than the manner specified, shall not be, look at this, shall not be considered as an invoice. So if I say it is not an invoice, then the recipient cannot claim input tax credit as per section 16. So law says that if this supplier has defaulted, then it is not a document for claiming input tax credit. This is what we need to understand. Concept of consequence of non-issuing an invoice, the recipient cannot claim the input tax credit. Next. There are certain exceptions. There are certain exemptions who need not issue IRN. Like you may say, sir, it is very burden that you are making a new law. I have to comply with the e-invoice regulations. Then the government has come with the idea saying that don't worry. These are the list of persons who can issue a regular tax invoice, not to prepare a e-invoice. Who are those? One is SEZ unit, not a SEZ developer. SEZ developer has to issue e-invoice on the basis of turnover, what is going to be notified. Bank or NBFC. Why? They have multiple transactions, millions of transactions on a daily basis or periodical basis. So they felt the database is going to become voluminous if I have to mandate a bank or NBFC to issue a e-invoice. Similarly, GTA. They felt GTA is again based on the volume, based on a policy decision, it's not required to prepare an e-invoice. Supplier of a passenger transportation service. Your road transport authorities need not issue an e-invoice. Then exhibition of movies by a cinematographic films in a multiplex screens. They also need not issue e-invoice. So wherever you go to this multiplex, most of these days, all you have is multiplex screens. They need not issue a tax invoice and a e-invoice. Aggregate turnover in a preceding financial year is less than the notified threshold limit. What is the notified threshold limit? As on today, 10 crores is a notified limit. Up to a sum of rupees 10 crore, I need not issue an e-invoice. This is effective as on 1st October 2022. Examination, 1 mark MCQ question, where they'll ask, examine the threshold limit, annual turnover, up to which e-invoice need not be issued. They'll give options, 12 crore, 25 crores, 50 crores, 100 crores. None of the above. Answer is, any assessee who have an aggregate turnover exceeding rupees 10 crores, they have to issue e-invoice. So answer, all the cases where the turnover is exceeding 10 crore, they have to issue e-invoice. Or if they give 8 crore is not required to issue e-invoice. Please wait and watch for one MCQ from this turnover limit. Now, when I prepare an e-invoice, now I'll give you the backdrop why this e-invoice has come, how this is going to help for the purpose of tax compliance. Okay, let me just see if there are any questions. Viraj is asking this question. Sir, in doing bank entries, I found GST deducted in a month from more than 2 transactions and issued 1 invoice, and also in 2B, 1 invoice is found. You got a clarity for this one. Then Srinivas is asking this question. Sir, is E-invoice mandatory on the basis of state turnover or all India turnover? A very good question. I have showed turnover of 100 crores, 50 crores, 20 crores, 10 crores. So Srinivas is asking this question. So should we need to calculate this annual turnover all India basis or state turnover basis? Answer, Srinivas, this is aggregate turnover all India basis. So all India basis, if my turnover is exceeding sum of rupees 10 crore, then I have to issue a E-invoice. Very, very good question. And for the benefit of other students, 1 mark MCQ question. This examination of annual turnover, I have to do on consolidated pan-India basis, not individual state basis. If one state is having more than 10 crores and rest of all states is less than 10 crores, please mention your answer. This has to be calculated on all India basis. Then Viraj says class is going fast. Viraj, there are a few concepts I have to cover which are relevant for your examination. I'm taking in detail. The points which are self-study based, I'm going little fast. Don't worry. The points where your attention is required, clarity is required, I'm waiting and giving you a little more clarity. Then Viraj is asking this question. Tickets issued by a theatre, multiplex is tax invoice required to be issued, and ticket rates are more than rupees 200. Now, there is a rate of tax 28%, 18%, depending on the ticket rate. That is on the basis of the amount charged on the multiplex rate of tax. But for the purpose of E-invoice, wherever multi-screen is there, E-invoice is not mandatory. Rate of tax changes on the basis of your amount collected, Viraj. That is the answer to your question. Now, coming to this concept of E-invoice, why E-invoice is required and what happens in case of an E-invoice. There's something called automation of information. Like you are 26 years. Government wants to have this input tax credit auto-populated and there's some backdrop why this E-invoice concept was brought under the GST law. Any movement of goods or supply of services. In case of B2B, in case of SEZ, in case of exports, in case of deemed exports. Only these 4 cases, E-invoice is compulsory. Only in these cases, E-invoice is compulsory. What is missing here? B2C. So if there is a B2C supply, E-invoice is not required. So the government is planning to integrate, automate these transactions. In these cases, they say, please mention the invoice number, invoice date. What is the nature of document? Is it an invoice, debit note, credit note, and the details of your customer, and details of product supplied, HSN, etc. And in case of exports, shipping bill number, date, etc. E-way bill details, in case of a e-way bill is required. On the basis of this information, a repository is being created for collection of taxes. Also, the tax disclosure, the turnover disclosure by the registered person. So there is a MIS which is automatically available to the GST authorities for administration of tax. That is the reason this concept of E-invoice was brought into GST law. And only for these 4 transactions, E-invoice is required. In case of B2C, E-invoice is not required. Consequence, I have explained that ITC will not be received by the customer. And in case of a service provider, penalty under section 125, 25,000 is the amount of liability. Process, I'll skip this for want of time. Now, unauthorized collection of tax. That means to say, the provisions under section 32 says that person who is not registered shall not collect tax in respect of a supply. So I cannot claim myself to be a registered person and collect a tax unless I'm actually registered. Or a person who's not registered, he cannot collect tax per se. For a moment, I'll give an example. Say I'm an architect. I go to a charitable organization. The charitable organization says, sir, we need a drawing design and drawing for a building to be constructed. I'll say my charges are rupees 5 lakh. Please pay GST also of 18%. Now, I give my invoice and the client makes the payment of say 5,90,000. Now, in the invoice, I never mention my GST. The moment I give a pro forma invoice, client, the trust has made the payment of tax. Here, law says that if you're not a registered person, you're mere issuing an invoice, not a tax invoice, then you're not authorized to collect GST. No registered person shall collect tax except in accordance with the provisions of this act. Now, when I have this provision, subsection 2, remember your composition scheme. Under composition scheme, I'm not supposed to collect tax. I'm supposed to pay tax on inclusive basis. So these are the two provisions where it says, if you're not a registered person, please don't collect tax. If you're a composition registered person, unless you're authorized, please don't collect the tax. Now, question comes here. So what happens here when I applied for registration? Like assuming I applied for registration on 10th of January 2023. My registration is sanctioned on say 15th of February 2023. Effective from say 10th of February 2023. Now, I cannot collect the tax. In between the period 10th January 23 till 10th February 23. This is a period where I don't have a registration. Just because I filed my registration on 10th January 2023, I'll not get a right to collect a tax. Similarly, sir, I'm a registered person, but my registration is suspended. My registration is cancelled. Section 29, what we have read the other day. If my registration is cancelled, then also I cannot collect tax by virtue of section 32. Then section 33 says that whenever you are registered and whenever you are issuing a tax invoice, please show the details of tax on the tax invoice. Now, I'll come to the important topic called credit note under GST law. I'll give you a backdrop and I'll explain this credit note under GST law. Tax invoice. Tax invoice will be reported using GSTR 1. And this information flows through GSTR 3B. Once I file my GSTR 3, payment of tax happens to government. Now, there could be a mistake when I prepare a tax invoice. What is a mistake? Sir, I have shown the value higher. Sir, I have selected wrong rate of tax. Sir, I have raised the invoice on a wrong person, wrong GSTN. Or, sir, there is a material damage in transit. Then there is a loss of stock in transit. Or there's a short dispatch. Various reasons. Now, these are all various reasons where the realization happens that tax was paid more than actual payment. More than actual payment. Now, in these cases, Section 34 gives me a mechanism to issue a credit note for adjusting the tax with subsequent supplies. With subsequent supplies. That means to say, in month 1, I have paid, say, 10,000 IGST. Month 2, I have realized that 2,000 is paid more than I have to pay. Various reasons. Month 3, assuming I have to pay 8,000 tax to the government. What I can do in month 3, I can reduce this 2,000 from 8,000 and pay net of rupees 6,000. Net of rupees 6,000 to government. This is the beauty of a credit note under GST law. This is the beauty of credit note under GST law. Right? Now let's read the provisions of Section 34, where this I can issue a credit note. What are the circumstances under which I can issue a credit note? Just give me a minute. I'll erase and then let's discuss on these points. Credit note can be issued under 3 circumstances. The law says that I as a registered person, under 3 circumstances, I can issue a credit note. What are those? Taxable value or tax charge in the tax invoice is found exceeding the taxable value. One is taxable value or tax. What I've charged is more than the actual value or more than the tax. That means instead of 5,000, I've charged 10,000 as taxable value. Or the rate of tax being 5%, I've charged 12%. This could be one reason why I can issue a credit note. Reason number 2, goods supplied are returned back by the recipient. Goods supplied are returned back by the recipient. Point number 3, goods and services are both are found to be deficient. So these are the 3 circumstances under which I can issue a credit note. Only these 3 circumstances I can issue a credit note, not any other circumstances. Reason, reporting a credit note, I can adjust the taxes which was already paid. Now, amendment which took place in 1st October 2022. From 1st October 2022, this was the amendment which happened. 1 mark MCQ you can expect from this slide. 1 mark MCQ. The time limit for issuing a credit note. Earlier it was 30th September from the end of the financial year. Till the date of till September from the end of the financial year. Now the due date was extended till 30th day of November from the end of the financial year. So if I talk about financial year 21-22, my credit note can be issued till this amendment happened in October 22. So let me take example of financial year 21-22. So any supplies which are pertaining to financial year 21-22, I can issue a credit note for this particular financial year up to 30th November 2022. Earlier, up to 30th September 22, I can issue. Now, the amendment says that any supplies pertaining to a financial year, a credit note can be issued up to 30th November of the subsequent financial year. This is one change point which was brought in. One condition, they say that whenever you are issuing a credit note, incidence of tax should not be passed on to your customer. That means the burden of tax should not be passed on to customer. That means to say I have billed 10,000 plus 18% GST. But actually, this is my billed scenario. Actual scenario, 10,000 plus 12% should have been the rate of tax. So I have collected 11,800 instead of 11,200. Now 600 is excess levied from customer. If at all, if this money of 11,800 is already received, that means incidence of this tax was already passed on, the burden was already passed on to customer. In those cases, credit note cannot be issued. Credit note cannot be issued. So where I have billed 11,800, customer received that 11,800, customer accounted 11,800, input tax was also availed on 1,800. The loss is that under section 34, credit note cannot be issued. This is what we need to understand as per section 34. Let me see if there are any questions. Okay. Viraj, I'm not that speed. I'm just covering up the important points, and in general, I'm explaining the concept. You can read the PPT, this material little one day in advance so that you can understand this concept in a better fashion. Yeah. If you can glance through the provisions, you will have a better understanding for these provisions. Next, debit note under GST. Debit note is a mechanism where supply took place. Then there was a instance where the taxable value or the tax was charged less. It was charged less. Instead of charging 10,000, I've charged only 8,000 taxable value. Instead of charging 12%, I've charged only 5%. In those cases, I can issue a debit note. Or the registered person, and for the purpose of issuing a debit note, there is no time limit. I can issue a debit note at any point in time. Next, we'll move on to important aspect called e-way bill under GST law. This, Viraj, don't worry. I'll just go with my discussion. You will understand this topic. Just listen to me. Don't focus on the slides. This is more of procedural in nature. And let me see if there are any questions so far. Varun is asking this question. Sir, what is the difference between a tax invoice and a debit note? Difference between a tax invoice and a debit note. Good. I'll explain this, Varun. See, tax invoice is a document issued when the supply takes place. I'll just explain this. Tax invoice is a document issued when supply takes place. Debit note comes into picture when I found a mistake that value or tax was charged less. Right? When tax invoice is correct, I will not even think of a debit note because, like example, the value is 10,000, but actually in the invoice I have mentioned 8,000. I noted that by mistake I have selected a wrong PO reference where the value was charged less. To make good this rupees 2,000, I issue a document called debit note. So should I need to issue a tax invoice? Don't issue a tax invoice. Don't issue a tax invoice. Please issue a document called debit note. So this is the concept, difference between a tax invoice and debit note. Hope you have understood this, Varun. Yeah. Now, e-way bill, we have another 30 minutes. We have detailed discussion on e-way bill. I'll give you a backdrop and then explain this concept of e-way bill, the provisions which are there in your institute material. When we talk about goods, there should be a tracking mechanism. There should be a tracking mechanism by lawmaker. For what? To ensure that all goods supplied pay taxes. Now, let's imagine one example where the goods move from, say, Rajasthan to, say, Kerala. Goods travel from Rajasthan to Kerala. Assuming that there is no tax invoice, no delivery challan. The goods are delivered in Kerala. Customer in Kerala makes the cash payment to this party in Rajasthan, some mechanism. Then, if there is no tax invoice, no delivery challan, the tax never gets traced to the authorities in Rajasthan or to the authorities in Kerala. So here, this concept of e-way bill was brought into picture by way of a document called way bill. Prior to GST, there was a concept called way bill. And this, in few states, it was called as e-sugam. Way bill is a permit. I'll put it this way. Way bill is nothing but a permit. What is a permit? I want to move the goods within the state. I want to move the goods between one state to another state. So here, this permit is giving an identity. Permit is giving an identity for its movement. This identity helps the tax officer for tracking whether taxes were paid properly or not. Now, this way bill was brought in the era where returns were filed manually. Manual returns are filed. Now, government was having very, very tough time to plug the loopholes in the system. Later point in time, where little automation happened. I come to from sales tax era to era called VAT. VAT era, where e-sugam was a nomenclature to replace way bill, where online permit is being sought. Now, when I give a permit, this permit is going to have invoice or DC number reference. It is also going to have a reference of value of the goods. It is also going to have reference of description of the goods. It is also going to have reference of the customer to whom these goods are meant for dispatch and the address thereof. Now, this was helping by and large for the tax officer to do the audit of supplier and also customer. So this mechanism where how much value of goods were disclosed in this permit and how much value was coming into the returns. Similarly, in case of customer, the purchase value vis-a-vis the sale value. The comparison of purchases vis-a-vis sales made easier by way of this e-sugam. The same concept was brought under GST by the name called e-way bill. So this is a backdrop, students, why e-way bill was brought under the GST law. Please keep in mind, only in case of goods, we talk about e-way bill. In case of services, I don't require any e-way bill. So it is a document. E-way bill is a document which is enabling movement of goods. If this e-way bill is not there, it is as good as no permit per movement. Per movement. So it says that every transporter should carry this document called E-waybill. Every transporter should carry this document called E-waybill. This document should be carried along with a invoice or a delivery challan or a bill of supply. Now, goods which are taxable, goods which are exempted, goods other than supply. Other than supply. So, whatever be the reason you are causing the movement of goods, E-waybill is mandatory. Law says that it is mandatory. It is mandatory where value of the consignment is exceeding rupees 50,000. This 50,000, when I say, it includes all taxes, not excluding taxes. Including taxes, the value of consignment is more than 50,000. I have to prepare E-waybill. Should be generated. This E-waybill shall be generated before commencement of the movement. Now, who will prepare this E-waybill? A person who is registered under GST law, or a person who is causing the movement. Has to prepare E-waybill. I'll give a couple of examples to understand this E-waybill before we go further. I'll give examples this way. Example number 1. Stock transfer from state 1 to state 2. Say value rupees 2 lakh. Second, goods for charity from state 1 to state 2. Value, say 10 lakh. Third, movement of oxygen cylinder for hospital use. Say the value is rupees 2 lakh. Now, these 3 circumstances, let us understand E-waybill is required or not. When I move the goods for stock transfer, state 1 to state 2, it could, if it is a taxable supply, I'll prepare a tax invoice. If it is exempted, I'll prepare a bill of supply. So based on the document, irrespective of movement from state 1 to state 2, that is to a distinct person, E-waybill is required. Answer is yes. Goods are meant for, example number 2, goods are meant for charity. From state 1, the goods are moving to state 2. For a moment, let's assume Wipro has purchased some say cloth, food items, and various other aspects meant for charity. So total, the value of goods is 10 lakhs. Though it is not meant for supply, I use a delivery challan. Since the value of goods is exceeding 50,000, E-waybill is required. Answer is yes. Third scenario, oxygen cylinder. We know that hospital, that is treatment of a patient, it is a exempted activity. Though the goods are cost for exempted activity, I prepare a bill of supply, and because the value is exceeding 50,000, E-waybill is required. This is what we need to understand with respect to E-waybill basic concepts. Clear? Let's move on to the next slide. When E-waybill has to be generated. Now, whatever I've explained in the previous slide, the same I'm explaining in detailed fashion. E-waybill has to be prepared. E-waybill has to be prepared before movement of goods. before movement of goods. That is, before it gets dispatched from the factory, I have to prepare an e-way-bill. In relation to supply, if the supply, that is a tax invoice is prepared, within the state, interstate, export, import. For all these four circumstances, e-way-bill is required. Now look at here, export, import. The goods are going out of India. The goods are coming into India. E-way-bill is required. For reasons other than supply, where a delivery challan is used. Sales return. Sir, I have supplied the goods, customer didn't accept it, it is coming back. Even then, e-way-bill is required. Purchase return. I have purchased goods worth, say, 70,000. I have say to the seller that I am not interested. Seller is taking back the goods because it is exceeding 50K, e-way-bill is required. Goods are meant for job work, e-way-bill is required. Exhibition, again, e-way-bill is required. Line sales, like door to door, I'm going to sell the goods, e-way-bill is required. Inward supply from unregistered person. Now, this is a case where I'm purchasing the goods from a person who is not registered under GST. Even then, e-way-bill is required. Who should generate e-way-bill? Case number 1. In case where supply is registered and recipient is registered, where source point there is a registration, end point also there is a registration. Source point there is a registration, end point also there is a registration. Then either of A or B can prepare an e-way-bill. There is no compulsion that A as a seller has to prepare or B as a buyer has to prepare. Now, the movement of goods is caused by A will prepare. If the movement of goods is caused by B, then B will be preparing an e-way-bill. This is what we need to understand. Scenario number 2. Where A, who happens to be a supplier, is unregistered. B, who happens to be a recipient, is registered. Now, there is one unregistered fellow, URP, one more registered person. In the case of a registered person, B is the person who has to prepare e-way-bill. B is the person who has to prepare e-way-bill. So case 1, both the parties are registered. Then either of the parties can prepare. Case 2, one of the party could be a supplier, could be a recipient. Whoever is registered, that registered person has to prepare an e-way-bill. Case number 3, seller is unregistered, buyer is unregistered. Seller is unregistered, buyer is unregistered. In this case, a transporter who is causing this movement can prepare an e-way-bill. A transporter can prepare an e-way-bill. So how does the transporter prepare an e-way-bill? Transporter can prepare e-way-bill on the basis of PAN available. By entering the PAN number of seller and the buyer, this e-way-bill can be prepared. Now, when the goods are sent for job work, that too, these goods are meant for interstate movement. Like, say, principal is in the state of Maharashtra, job worker is in the state of Rajasthan. Since the goods are meant for interstate movement, principal, if registered, he will prepare e-way-bill. Job worker, if he is registered, he shall prepare the e-way-bill. I'll give an example. Say, the supplier is in the state of, say, Uttar Pradesh. Supplier is in Uttar Pradesh. Buyer is in Maharashtra. Job worker is in Rajasthan. So, the supplier will raise a bill to the buyer in Maharashtra, will deliver the goods to a job worker in Rajasthan. This is a model called bill to ship to. Bill to ship to. Now, in this case, because the buyer is in Maharashtra, this job worker can prepare an e-way-bill if he is registered. Or principal can prepare an e-way-bill if he is registered. So in case of a job worker, either of the parties can prepare a e-waiver. This is what we need to understand. E-commerce. These days, you would have seen this Amazon, Flipkart, etc. So if the seller is selling the goods on a e-commerce platform, the e-waiver can be prepared by a e-commerce operator or the courier agency who is doing the transport, the movement of goods on behalf of the seller. Seller is not worried or mandated in case of e-commerce subject. Handicraft goods. Now we have studied under section 23, where handcraft goods, there is a threshold limit of 20 lakhs or 10 lakhs. Though there is an interstate movement, no registration is required. No registration is required. Now, what if there is a like I'll give an example. Say, seller is in Hampi, Karnataka. Buyer is in, say, Punjab. Seller is not registered, unregistered person. Buyer is also unregistered person. Now, assuming this is a handcrafted goods, this seller in Hampi, Karnataka, is selling the goods to a customer in Punjab. In that case, e-way bill can be prepared on the basis of a PAN number. Registration is not required by the seller. Why registration is not required? Section 23 is giving a permission not to register, though it is an interstate supply. So in case of interstate supply, using the PAN number, the seller can prepare a e-way bill. This we have discussed. Now, basic provision. So how do I prepare an e-way bill? Like your GST portal, www.gst.gov.in. I have a portal called e-waybill.gst.gov.in. I will log into this portal and there is a form called e-waybill 01. This form has got two parts, part number 1, part number 2. Part number 1 is a Kundali, basic information. It is a basic information. Part number B is the information of the transporter. So here, my e-way bill says that when I log into the GST portal, it is going to ask the GST number of, it is default auto-populated, the place of dispatch, the GST number of the recipient if available. If not available, I will say URP, unregistered person. The place where the delivery has to be done, document number, document date, value, HSN number, and what is the mode of transportation. And the part B, it is going to consist the vehicle registration number and the transport details, the GST number of the transporter. In case of a temporary movement between Nepal and Bhutan, between India, this e-way bill compliance may not be required. Now, having said e-way bill is required, there are certain exceptions. First and foremost, when I talk about e-way bill, please keep in mind, unless part B is filled, that is, who is the transporter? My e-way bill is not valid for movement. Unless I fill who is the transporter is going to cause a movement of goods, my e-way bill is not a valid document for movement. Clear? Now, there are few exceptions for preparation of e-way bill. I'll give an example to have a better understanding. So the factory is there at the factory is there in state 1, say at Pune. The transporter has got a warehouse at Bhiwandi. So this is Just for discussion purpose, from factory, this warehouse is 20 kilometers apart. What does a transporter do? Transporter uses small vehicles to go to various factory, pull all the material, bring this material to the warehouse, and on the basis of this pulling, this all consignments will be put to a big truck. These are all small vehicles, and this is a big truck. This will be dispatched from warehouse to the destination. So the concept here is a transporter may use these smaller trucks for pulling the consignments at a warehouse, and from the warehouse he can move the cause the movement to a destination in a bigger truck. The provision says that the goods are transported for a distance up to 50 kilometers within the state or union territory from the place of business of the consignor. So from where the goods have been picked up to 50 kilometers, I move the goods, that is till the place of business of the transporter, that is my warehouse. Then no need to furnish the details of conveyance in part B. So this part B, if not updated, don't worry. So most of the cases, it so happens that all these transporters, they have like local hub. Now here, my GST law says that unless I fill part B, my e-way bill is not valid. E-way bill is not valid. The exception for that, it says that pooling is done by the transporter in the up to local hub, then up to 50 kilometers. Up to 50 kilometers, no need to prepare e-way bill. Same provision is applicable once it reaches the destination. So like I'm pulling at a source point, I can do the same at the destination. So destination, what happens? I have a main warehouse. From main warehouse, it goes to the various small hubs. So the law says that from the main warehouse to the local hubs up to 50 kilometers, no need to prepare e-way bill. This is a provision. Exception where part B need not be prepared. Yeah. Now, this provision says that multiple mode of transportation. When I say multiple mode of transportation, the movement of goods can happen on road or by rail or by air or by sea. So whatever be the mode of transportation, let there be a reference of this mode on your e-way bill. Please update your railway receipt or air or vessel in case of this multimodal transportation. So if the goods are delivered by road, the provision says that the person who is preparing the e-way bill, he can update the details of transporter. The transporter can choose to update this vehicle details. The vehicle which is carrying the consignment, the transporter can update the registration number from one vehicle to another vehicle. So here, initially, the person who is preparing the e-way bill, he will generate an e-way bill. Later, the transporter will update the movement from one vehicle to another vehicle. This is by road. So what if there is a multi-mode transportation? Initially, I prepare an e-way bill for giving a delivery to a vehicle which comes to my factory. From this vehicle, the goods are transported through air. The goods reach the destination. By train, it comes back to the road. From road, it comes back to the factory. So here, e-way bill provision says that please update the mode of transportation, air or rail or road on your e-way bill. Consolidation of e-way bill, the provision says that when there are multiple consignments in one vehicle, all those e-way bill numbers can be consolidated into a form called e-way bill 02. This is just a procedural aspect. Now, sir, I have prepared an e-way bill, but I have noticed that some mistake happened in an e-way bill. Why? The goods are not dispatched. I have prepared an e-way bill, goods are not dispatched from a factory. Or the details what I've mentioned are incorrect. Instead of mentioning, say, club soda, I've mentioned something called aerated water. Instead of mentioning a sewing machine, I've mentioned as a cutting machine. So if there is a wrong description, wrong details, then within a span of 24 hours, I can cancel my e-waybill. Exception. If the vehicle has been dispatched and the proper officer has intercepted the vehicle, that is verified the vehicle, then e-waybill cancellation cannot be done. Now, time limit for validity. When I say validity, what is the time limit for e-waybill prepaid? The law says that, look, when you're causing the movement of goods, please don't take it for granted that your e-waybill is having an indefinite life. There is a life of e-waybill. What is that life? Based on the distance from source to destination. Source to destination. If it is an ordinary vehicle, this is the mechanism I follow. If it is an over-dimensional vehicle, that is where I have the larger trucks, bigger vehicles, then they say up to 200 rupees, 200 kilometers every 200 kilometers, 1 day is valid. Over and above 200 kilometers, 1 day addition happens. In case of over-dimensional vehicle, that is a big truck. Like example, you have this windmill. Windmill has a big fan. You have the 20 trailer. We call a 20 trailer. 20 trailer is a truck where the average speed will be 20 kilometers, maybe not even 20 kilometers. Average speed could be 5 to 10 kilometers, 5 to 10 kilometers per hour. So for them, they say for every 20 kilometers, 1 day is a validity, because during daytime the vehicles are not permitted. Maybe night times they have some difficulty. So every 20 kilometers of destination, 1 day is the validity. So if you have this consignment to be delivered for a distance of say 100 kilometers, they say for every 20 kilometers, 1 day is validity. 5 days is the time within which this consignment has to reach the destination. This is the purpose of your over-dimensional cargo vehicle. And this, when they say over-dimensional cargo, that means it is a consignment where multi-mode shipment is there, and one of the transportation happens by ship. Now, so what if you have seen there is a validity of consignment? If I fail to reach destination, you have given time limit of 200, every 200 kilometers, 1 day. I have failed to reach the destination, various reasons, like natural calamity or riots, or there is a vehicle damage or accident, etc. Then the law says that don't worry. You can update the details in part B and seek for extension. Mention the reason why you are not able to reach the destination. On the basis of the details you have furnished, I'll give you permission to seek for extension. And this extension, 8 hours is the time within which you can seek for extension. Next, like I have given option for cancellation. There's an option called rejection of e-waybill. Who can reject an e-waybill? The recipient who receives this information. He can choose to reject this e-waybill within a span of 72 hours. The person who prepares the e-waybill, within 24 hours cancellation. In case of a recipient, the recipient can cancel up to a period of 72 hours from the date of preparing the e-waybill. Then there is a list of goods which is exempted from e-waybill. Institute material has given the detailed entry of these 14 transactions where e-waybill is not required. Paucity of time, I will just skip this particular details. This delivery like CKD, SKD, I have discussed this transaction where in case of a CKD condition, every tax invoice will be self-certified and a delivery challan will be prepared for each of consignment. Like example, I said 4 vehicles. So similarly, every delivery challan, every vehicle, there should be a separate e-waybill. Now, there is a concept called bill to ship to, which I have discussed in case of a job work. This also I'll skip for positive. Thank you. Bill to ship to is a model where goods are dispatched from location, goods are billed to another location. Students, we are at 9 o'clock. There is a concept called section 129. What we will do? When there is a e-waybill which is not there, there is a violation of GST provisions. This concept of non-carrying of e-waybill and non-compliance with e-waybill provisions of section 129. We'll have a detailed discussion of these provisions in our next class. 23rd, we are going to meet back again. In that class, I'll explain in detail the consequences for non-preparation of e-waybill. We will continue with this line and then we will have a discussion on other chapters. So we will end our discussions for today. Good night. Goodbye.